Good. So you are welcome. You already know my name is JW Global Trader, which is Joshua Ureka. We will first start with addressing your question, which you asked about fair value gap. Is the entry after fair value gap or the entry is before fair value gap? Now, if you can remember, these are things me and you draw on the chart that particular day. The most important thing I want you to understand here that the most important thing I want you to understand here is that fair value gap, we are using them for entry. If you have understand, but the major thing we're after is liquidity. That is where the market is going to. That's the most important thing. And why must you go to where it's going to? We have already outlined all of those stops, me and you here, that we are looking for liquidity or we're engineering liquidity. And then your question came is about entry. But before you enter the market, the most important thing you have to take note of is that where is this market going to and why must it go there? And is it a high resistance? We're going to talk about that, or a low resistance market. Now, the most important thing about that, your question, that I want us to identify one fair value gap here so that you can be able to see clearly is that, remember, we're not using 1 hour. So let me take it off the 1 hour. We can go to daily and then let's begin from daily and then you see. So if I'm to bring this back, you remember that we drew this fair value gap that day on a daily time frame, right? This particular one was drawn on that particular day. Now, fair value gap simply means that the market has already passed. Now, you discover that that day that we drew this particular, which I think is 4 days back, which it was one, now this is today 1, 2, 3, 4. The market was on this particular candle that we drew that particular fair value gap. Now, this is fair value gap. See what I'm doing here. Before we extend it, this is the meaning of the fair. This is what fair value gap means. The fair value gap means that the market is supposed to have a balanced movement. Now, this place here is fair value gap. Let's start from here so that you see it properly. Now, you see that the market, when it was coming down here, you see that it, after this candle, it formed, then this green candle stop here, then this red candle, which is the sell candle, or we call it the bearish candle, it come down straight. So in an ideal balance price, this particular red candle is supposed to come and touch this particular green candle low. So that it means that there is no anything here like a gap. But it is gap simply because it lacking, this is an inefficiency. So it means that the market have to leave this, it have to come and fill this gap. It could be with the wick, but more preferably with the body. But if we are going for a downtrend, we are trying to the market, the fair value gap form after the market. Now, this is what qualifying a fair value gap. The market have to form the fair value gap like this, leave the fair value gap, and then come back and touch it again. That makes it a valid and then a tradable fair value gap. Now, see, for instance, here what this price is doing here. Let me even take this high because we have not reached here. Now, see what this market do. The market have aggressively go down here first, and then it never come back. And then when it come back to this particular place, which is this the fair value gap we're talking about, when it comes to this particular fair value gap here, this particular fair value gap here, what do you see? This happened on the 19th of August 2024. When it comes back and then difference of the fair value gap with the market one. And then what do you see the market? The market now is down. And where was it taking down? That we have not yet started up. But when we have these like that talking about this, I ask you whether you are too competent or you know about your information. But if you are not too competent, then we're going to them. So the fair value gap has to form, the price has to. All right, type in again if you can hear me. I was using my phone, but I've removed it. Can you hear me now? Can you hear me now? Yes, okay, that's good. So I've removed the mic. So now what I was trying to say here is that the market have to trade and leave the particular fair value gap and then come back to the fair value gap, trying to go through it, but it could not. And then it rejected it and then trade in that same direction. That make it the fair value gap. So price have to leave the fair value gap first and then pull back to the fair value gap and then it trade down again. Now see where support and resistance is not something to bother. This is resistance according to people. And this is another resistance here. So if we were to trade based on support and resistance, we have not even been able to enter because it could not reach the resistance. But we enter because we were trading it based on fair value gap. And why we entered this and we could have been able to leverage peak here is simply because we see that it could not even be able to reach the 50% level of the fair value gap. This black line here is the 50%. So the fair value gap that trade half the fair value gap and leave the remaining portion of the fair value gap open are the fair value gap that we look into them to trade more into them. And you see it went down aggressively and then it come back and touch it small again and then it continues going down. This is on daily. So on daily, this is for people that, but we make reference with higher time frame simply because we could have had this fair value gap here still and then we will leave it like this and make it as a point of reference going into the future. So anytime we're coming here, as I told you, you have to label it. This you could have labeled it daily fair value gap and then new day opening price, new day or new week opening price. All of those things you have to label them and then you should be able to note them. So I believe that answer your question concerning fair value gap. So looking into the market today is Friday already. So the market has almost come to an end for this particular week. So what we're going to look at today here is that this is daily time frame. And then we discover that since that day that we left the market on this particular pair, to me has just been consolidating because there's no any other move here. So for people that trade higher time frame, they may could have just took up here, just where they stay for like about 1, 2, 3, 4, 5 days throughout this week from Monday, yes, which is 7 to today, which is Friday, the 11th of October 2022. So now, but we that we trade a little bit intraday traders, we trade a minute, highest we enter is 15-minute time frame, we can be able to look at an opportunity here to enter. And then there was another thing I was trying to introduce you that day, which is order flow. But fair value gap is your major reason of why you should enter the market and why you should not enter the market first. And I've explained to you, and I'm still repeating because my mentor said repetition is key to mastery. So what it means here is that you definitely have to mark those charts and begin to do those assignments if you have not been able to do them. Why? Because it is in those assignments that you will be able to see the market. Now we talk about the time that the market moves, which I told you for this particular section, which is 9 a.m. in Nigeria time. The market moved between hour of around 5 and the market start looking for liquidity to around 11. So this morning we're going to look at the possibility of whether there was an entry around that 5, and by this time, which is 9, whether we will still see another entry. But before then, I will equally be able to take all of these things I drew here off, and then I just want us to strictly focus on yesterday and today, so that you see something here. Now, I have took all of them off. So what I'm trying to do now here is that we are coming now here to mark the opening of yesterday and today. And then that is the new day opening, and then the new day opening of yesterday, which is today, market opening price. So we discovered that this particular, we'll go back to 1 minute so that we can be able to, or 5 minutes so that we can be able to have it accurately, perfectly fine. You know the time, 10 p.m. Nigeria time, that is where the market starts moving. So which time is this market? The market is in Nigeria time. So we look for 10 p.m. yesterday, Thursday. 10 p.m. is 22 in Nigeria local time. Because this is set on 24 hours. So we will even equally be able to take this line off. Then let's have it from 22, this is 5, Friday, 22, where is 22? 22, this Friday midnight. So 22 should be around somewhere here. Yeah, this is it. So this is 22 when the market opened today. I just want you to see something very important. And then this is today. Today is that's when the market opened. The market closed here yesterday, and then the market opened here at the same time. Open here is down. You can check the price here. Open here is 505. So we will miss it with 1. I've told you how you can be able to adjust these things, all of them. That's the open. And then on this particular candle, the close here is 508, and we got that one perfectly right. We can lock the two of this line, this orange line, to avoid any further distraction going into the future. So now, as you can see, we have already marked the particular high, the new day opening gap of yesterday. But I want you equally to understand that this market is a continuation or a reversal market looking for what? Liquidity. So we go back to daily. What are we going to do in daily? This is just I want us to do now, because we want to have at least 2 to 3 days high and low of those days. So now this was day before yesterday, high and low based on this chart. So we're going to change this color now to green so that we can be able to identify them. This was the low the market formed day before yesterday, which is on Wednesday. Then on Thursday, this is the low. And then these are the high. You can equally mark the high of yesterday. That's how high the market went yesterday, and the high of day before yesterday. So now, you know that this market moved based on what? Liquidity. Now we have our opening. Now we go back to our 15-minute time frame or 5-minute time frame. So here now, what are we looking for? We are looking for when the market opened and what did the market do. When the market opened, and you remember we said the market have to make a new day low and then make a new day high. And those new day low and new day high have to be taken within at least the first 2 hours of the opening, which is Asian market. So today is Friday, you do not expect any mega move from the market. So now, so in order to have those particular things now on board, now you discover that we opened here, we closed and we opened here. So now, this was day before yesterday low. And then this is today low the market tried to make to reach here, it could not be able to reach. And then we have a low here. This low serves as our own now primary low, because after this low, which is made today, that is the first low of the day. Now we can't call this one face high. This could be the face high, because after this low, there's no any low that have taken this low in order for us to even call it the face low. So until we take this low, before we can be able to see any other one as the high of the day. So by 12 midnight, we're still around that opening day high and low. So we discover that we only take this high and then we are still close by. So from here, now you discover that where is this market? If the market have taken the high here, because it have even tried to take some minor lows that they are inside the original low of the day. So from there now you will discover that, okay, yesterday, this is the low of yesterday. This is the low of day before yesterday. You could have been named them and you know them. So you were looking for where to enter the trade. But you discover that, okay, you have only taken the low here, which is around which time in Nigeria? They have to keep this here, which is around 2 a.m. this morning in Nigeria time. So you discover that at that particular time, you take that low around 1, and then if you want to look for any entry here, though there's no any entry here that justifies any move here. But what you have to do now here is that, okay, you know that there is a low here that have to be taken. And after that low, then there is another low here, which is Thursday. Remember, this line is for day before yesterday, so we have to go back, see it, but no need for that. So this was Thursday's trade, and this is the low of Thursday. Thursday low, which is yesterday, low was here. This is the low yesterday, Thursday. This was the low. So when you discover that after you take this liquidity, the next question is that where is the nearest liquidity? Where is what? The nearest liquidity. So you discover that the nearest liquidity was this one, and then this one. But must we take this one and this one? The answer is no. This is yesterday low. So we have taken day before yesterday low. We have taken the initial low or minor low to this overall low of yesterday. So now there is a liquidity here. There's people that have entered the market. This is the way you have to be thinking. People have entered market here. Market have moved there. May have moved, take profit, stop loss here. But what will the market do? Market will come and take them out of the market. So market come and take them out of the market. You see aggressively how they were coming. Immediately they take these people out of the market. Then there was your entry. You can see fair value gap here clearly. I believe you can see on 5 minutes before we even go down to another smaller time frame. This was a fair value gap around 2 a.m. this morning. This trade could have been valid this morning. I minimized this thing so that we can be able to see very well. But this is a fair value gap. You see where this candle open here and close here. Why you can take this trade is simply because this now become the low of the day. Because this was the low of the day when you open and you see all of these trades that have took place here. But when it took this one, and even when I took yesterday minor low, the overall low, and you see that the market drastically drive back to this particular your new day opening gap, then you see what it was doing, you were observing. Then you see how aggressively now it pulled down, but it rejected immediately at the same time. So this rejection indicates that, okay, this market will definitely be able to go and continue with these guys here because of what? We have swept these guys, and we are still in today market. Pay attention. Today market is most important than yesterday market. Yesterday, I've done whatever you want. We are in today. So today, we have to fuck people up. Some people may have entered market here. So what are we doing? Even from yesterday, some people, they could have entered the market there. So what we're trying to do is that We want to take those people out of this market too at the same time. So what will the market do? The market will definitely look for an opportunity to engage these people here. So looking for opportunity to engage these people here, you already know that this is day before yesterday low. And market have went to take liquidity, bought here and here, and then is aggressively coming back today before yesterday low, telling you that we are not going lower again. Why? You see that there's a liquidity sitting down above here, because after it have done this, you discover that this liquidity here is closer than this one that is on top here, because this one is a long time low compared to this low, and this was yesterday low compared to today low. So what you discover here is that even when you are to go back to 3 minutes or 2 minutes or 1 minute, because you have to subscribe for this particular trading view before you have some time frame, you discover that here you still have the fair value gap still standing. But on 5 minutes, it was more bold. So you start looking for fair value gap from 15 minutes on particular currency pairs like this, or let's just say 5 minutes for risks, so that your risks can be a bit minimal. Then you can see that this is the fair value gap I've been referring to, because these candles form before all these things come here. And then what are you seeing? You discover that the market is always trying to what? You see that even when these candles try to come down aggressively, they did not even try to reach a low or past the low so much. And then there is another thing here. We call this particular, you see that in between these places here, let me open it up for you to see. In between these places here, there is no candlestick body that was traded here. So you can equally be able to take it like this because of what? This is imbalance, because there's no body of candle that is traded here until this one start coming down. But remember, this formed before this one. So when this market now start coming down, and then you begin to observe what it's doing, this candle come like this, and then it drastically go back. Whether you could have entered on what do we call it, on buy stop, which is the best way to enter the market, your stop loss could have not even been near it. Why? Because your stop would have based on the strategy, your stop loss to be here, while your entry could be from anywhere here. But if it would be long, when you have a long wick like this, you can equally be able to measure the wick into two, and then put your stop loss below 50% of the wick. So your stop loss could have been even somewhere around here. So you see, the market drastically even deep down, but still could not be able to touch your stop loss. So this happened for ancient hill zone. So you definitely, at the beginning, you have to have some stop loss that they are reasonable enough. Not that it's all the time that you have to depend on the currency pair. So you discover that that was exactly what happened today, this morning. And this particular place could be your entry from any moment here. If we are to refine it now down to 1 minute, then we can still be able to see opportunity. Why we want it at a very smaller time frame is to have a small stop loss. That's the most important thing we are always trying to do. So you see that here there is no any fair value gap except of this one here. So even when you could have still entered here, your stop loss will always be on the candle number 2, because it's 3 candles. This is candle number 1, this is candle number 2, this is candle number 3 that form or make a fair value gap. And then your stop loss will have still be under this candle. And then you see what they do. Yeah, they try, but they will not be able to, because initially you may have seen some profit when you enter here. Then the market try to dip down, but it still find where support, as some people say, or it find balance at this still particular low of day before yesterday. Because when you have them like that, when price is coming to them, you begin to understand, or you begin to check what is the reaction of price returning back to this particular place or particular low or particular point of reference. You have them on your chart is for reference purpose, so that you know what exactly, see what they were doing on 15 minutes. Would have been because you are using from 15 minutes after, we say from daily to 15 minutes. So you see how well it was here. though there was no fair value gap here, because until we reach here before we get a fair value gap. Yes, you can have still wait, and then you can leverage this fair value gap here, which is on the 15-minute time frame. And then you know that that time you are above new day opening price. So you see this was a fair value gap here, that still the trade could have been running, because this entry is around 6 a.m., which is, I told you which time, 5 a.m. So if you could have come around 5 a.m. this morning, 5 a.m. was here, this is 5. So at the opening to at least an hour, which is 6, you see what the market does. And you already have a fair value gap here. So by this time now, if we're to go back to our 5 minutes now, this would be your thinking now. Because the thinking is what makes the thing happen, not really that you just sit and then the things happen. No. So by this time, you understand that this was 5. So by 5, you are waiting for the phase high and phase low to form. And you discover that, okay, there is some lows that they were in the market during the Asian market. But if you are waiting for the first 1 hour, you know that this was the first starting of the 1 hour. And then this was your low. And there's no any price significant that have moved to this place in order to say that, okay, you have tried to take your buy side liquidity until we have this low here, where market try to go back but could not, then come back and take the liquidity, and you know that this is another point of reference, your new day opening gap. So you will be very attentive to know that this is where the market opens. So if it want to turn the other side, definitely it means that you want to change direction, because the candle on a daily, see, this is how the candles react on the daily. So it means that if it was going up, that means in a day, that particular day, the candle is showing green going up like this particular candle here. Now, sometimes today it may shock you that at the end of the day, this candle may turn red. But as people make money, yes. As people lose money, yes. So it does. That is why the smaller time frame, it now gives you in between the kill time zone, which is now about the time, because I believe market's supposed to run between an hour of 10 to 11 aggressively most of the time, except today is Friday. That is another thing. But we have what we even call thank God it's Friday. So that is exactly what happens here. So when you come back to smaller time frame, you discover that, okay, you see it now. This market is doing this. This market is doing this. That is exactly what it's doing. It's not doing anything different. So you know that these are what? Your buy side liquidity, meaning that there is some stop loss here. Why? Because market has been selling aggressively for a long time. So you discover that people have been what? Selling. People have been selling, people have been selling, people have been selling, people have moved stops here. Market even still went down. So there is stop loss here, there is stop loss here, there is stop loss here. So are we going to take them out today, or we're going to take those who have buy today? Now, it's left for the market to decide. But our decision still stands that we already know that if we were to look for entry around 5, which by 5 or 6, yeah, let's just say you may sleep and wake up by 6 a.m. You by still now, I will still be in the market looking for opportunity, but you can take partials. But what another thing you have to identify here is that this place is not a small range. So you have to be taking some partial, because I think from here now, from here to this place is about, yeah, it's a thing you can do 100 pips. It's not that big move, not that big move for Euro JPY. But you see, the market is not even really moving for the past how many days. This week entirely, it doesn't go anywhere serious. It has just been moving in between that particular place we discussed the other day. That particular fair value gap of the daily and weekly, we show, or I show you the other day. So you see what the market is doing. So sometimes when I see the market is doing like this, and then I check my 15-minute or the daily on the left-hand side, and I do not see anything significant. It's not most that must hit my stop loss or hit my take profit. I can willingly close the trade and go home and sleep. Whether whatever you do at the end of the day is none of my business. Moreover, you must not trade every day. And secondly, you must not win every trade. So that is exactly how this market is being repriced. So you see all these moves here, there's nothing exciting there. All these things are going up, down, going up, down, going up, down, going up, down. But I think even when we could have leveraged it from there to this particular place, that's 20 something pips. And this is unusual with Euro JPY. This is not up to even 50 pips if I could have entered by now. But it's still fine. 30 to 40 pips is very, very okay when you are starting. And even when you're not starting, when you know what to do. And then I'm looking at this week. This week is too long. So let me see where the market. So if I'm to enter here, all right, whether you have reached it, have not yet reached, this could still be my take profit because this week I can use the up week and then I can use the middle of this week because this week is passing a serious information. Why? We'll go up, we'll drag. I think that was on Thursday. Then we'll drag again yesterday, sir. It's a Thursday, like as if Thursday was another. So I could target this place as a target, this place as a target, and then I wait for him. So what you will be doing right now here is that on right now, there is no anything look like a trade to take right now. There's nothing here that look tradable right now on Euro JPY. There's nothing here that is looking tradable here right now on Euro JPY. So what did I do? If I cannot be able to find anything right now between now to 10 a.m. this morning, I will definitely 10:30, 11 highest, I'm done. So if I'm to come here, I still see we are still in what? London section. So I discover, okay, we have been doing this here. The only fair value gap I have on 5 minutes is this particular small one here. But remember what I told you that when we're going up like this, in an ideal market, when price is trying to reverse, this particular high here, which gives us this low, should support the price not going down. Some people say it's support and resistance or break and retest whatever. But you see what it's doing here, it's consolidating. It may decide to dive back to our new day opening gap or whatever it may decide to do. It's up to the market. We do not control the market. So for now, as it is right now, there's no any point to enter this market. If I have not been able to get any entry around which time here, around all these times, which is around 8:25, and then maybe I could have been by now. I would just be watching the chart. Sometimes you can watch it even for hours and you still don't see entries, and you just have to what log out and go home. It's not a big deal. It's better than you take a loss. So if I could have entered, this could have been the fair value gap. I could have leveraged, and this happened around 7:45. And so if you could have still been this in drive, see what it happened here. There was an entry here, there's an entry here. You are seeing all of those stuff I've been marking. Why I don't want you to like be more conversant with my own is because you seeing it is even more important than me showing it to you, because this is only about 30 pips. So see, that is it. So it's 30 pips now that this market has moved from that particular time. So Andrew, I believe we have been able to cover and answer that your question. So I say I will show you Forest Factory. So let me quickly go to Forest Factory and see, because I didn't have much time now. Let me show you Forest Factory quickly, and then we are good to go. I believe I can be able to show you Forest Factory in less than 3 minutes. I so much believe. So I know you won't be seeing that screen. So let me share that screen right now. Let me share that particular screen of the Forest Factory. So now, this is a website you're going to use for news. You just go to forestfactory.com. You see it here. That's the site up here, forestfactory.com. You can be able to see it. Now, this is a quick explanation of what I'm going to show you before my time runs out. Now, you see all this is currency, all of this currency. You can be able to filter them here and remove the one you do not want. Here you see is all. So you can be able to tick this one. It means that no economic, non-economic. Now you see them here. This one means low impact expected. So when you see yellow, you mean low impact, medium impact, and then higher impact. So most of the time I remove these two, and then for the currency, you can put none, and then you select the particular one. Here in this case is Euro and JPY. I'm trading, and I click apply. So what it means here is that the only thing is going to be showing me here is Euro JPY. So you see, all this while there's no any news concerning Euro JPY. So, but because Euro JPY is not the major of Dongu, everybody trading will definitely be able to have USD because US determined the movement of the market in the whole world. So why? Because Thursday was what yesterday. You see what this all these high impact news they drive the market yesterday. What you were seeing on that chart, that aggressive move on that chart was as a result of this CPI unemployment claim, core PPI month, which is today, Friday, by 1:30, which is 8:30 US time, but it's 1:30 Nigeria time, today being Friday, and then PPI. So I understand now this market will move aggressively later today. So you can come back and check it. So that is how we know. And then you can be able to, you see this news, FOMC meetings, these are the most important one. 1, 2, this CPI, this FOMC, and then CPI, unemployment, PPI. These are very, 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 very important news. That on those days, myself, it's advisable you do not even trade. If you have not even entered trade, or you have not trade before 1:30, because all of them most times 1:30 Nigeria time. So I believe I was able to show you one or two things as I promised. And then going forward now, we're going to be looking at other things like other blocks and how to enter the market appropriately and how to get a tight stop loss. So I think any other question, you drop it to me on my Telegram, and then I will be able to answer. And then I will upload the replay so that you can be able to watch it over and over again. So stay safe and take care, and I will see you on the other side. Any other question, just drop them to me on that particular channel.